Hey everyone, you're listening to the Active Turnkey Podcast, a podcast designed for hands-off, passive real estate rental investors. In the Active Turnkey Podcast, you'll hear Tom Olson and Jared Stoltmeister discuss all things turnkey rentals with other turnkey providers, service providers, and rental investors. Our goal is to help you reach your financial freedom and whatever comes after that. Let's go. Hey everybody, welcome back to the Active Turnkey Podcast. I'm your host, Jared Stoltmeister, and we have with us the Tom Olson, but not just Tom today. We have a special guest. Tom, you introduce our guest?
Yes, very special guest. Somebody I've known, I think, for about 11 or 12 years now, Kevin Thomas.
Right. Yes.
And he's from Richmond, Virginia, and he's going to be speaking tonight at our local meetup group. I figured, why not just get him here on a podcast? Mm-hmm. He's going to be talking about a topic tonight that is one of the topics I think is kind of one of the most overlooked topics when it comes to real estate investing.
Right.
And look, he's actually agreeing with me. What do you know?
You're absolutely correct.
He likes that.
So a lot of people, when they talk about real estate investing, and even on our podcast, we talk about the numbers a little bit, but I mean, for the most part, like we're talking about like, hey, what kind of house do you want to buy? What kind of cash flow do you want? All this kind of stuff. But really, at the end of the day, what does a real estate investor need to know?
Yeah.
And what kind of numbers do we need to be tracking? And how do we make that happen? Do we need to hire a bookkeeper? All these questions are things that we need to kind of ask ourselves when we get into this this new investment realm. And some of us are active in real estate investors. Most of the people that are listening to this podcast are probably passive. So just so you know, Kevin, most of the people are probably more on they own rentals. They have other people manage for them. They're kind of trying to be more passive. But even you guys should be tracking certain things, and you guys should have certain things in your own books. It shouldn't just be like whatever you get from the property manager, that's what you give to the accountant. Or that's probably what most of you guys do. I know.
That's right.
But at the end of the day, like we are kind of responsible for our own books and to make sure that we are keeping track of them and to kind of keep track of what we want to make sure that we have. And really, like some of it can help us be better investors. So I love to talk about this topic. It's one of the things that even when I had the Good Success Mastermind, I was really passionate about, like, hey, knowing your numbers, make sure you guys know what your numbers, how much cash do you actually have that's yours, how much cash do you have that's other people's, making sure that, you're actually cash flowing and not just like you think you're cash flowing because of performance says you're cash flowing. But that's what we're going to talk about today.
So we were talking a little bit before, so I got to meet Kevin before the podcast, but I'm going to jump right in. Are we okay doing that?
Go for it.
So yeah. I'd like to propose a...
Who's going to propose? You're not going to get on a knee, are you?
Maybe a little bit more formal. But no. So here's a question. You might need a bookkeeper if this. Like, where's some signs, some red flags you might need a bookkeeper if, and some things you've seen or mistakes, things people miss. What are some red flags that investors have that they should be paying attention to?
Well, you might need a bookkeeper if you just have a box of receipts that you take to your CPA every year to do your taxes, because you have no idea what your business is doing. You have no idea of what expenses you're incurring, how much income is coming in per month. You have no idea. You just have no idea at all. Everything is broken down in QuickBooks when you do bookkeeping, so that especially if you have a bunch of properties, you can quickly use the reports that QuickBooks gives you to analyze those properties and see which properties are performing best, which properties are performing bad, and you're going to find patterns. You're going to find properties that you have turnover in. You have rehab going on all the time between the turnovers and everything. And that quickly shows you in 5 minutes, just looking at all your properties, hey, what do I need to hone in on, maybe get rid of, okay? And maybe get rid of something and buy something nicer, okay, in a better place so that you don't have that problem.
Sure. That's good. That was a good question. I feel like we probably should back up just a little bit. We definitely jumped right into things.
Did.
And that was great.
I did ask.
That was great. So why don't you just at least introduce yourself, Kevin?
Sure.
And just kind of, just tell I've known you for a long time.
Here's the intro.
I've known you for a long time. I know your background, but I don't think our audience knows your background. So at least just give everybody, hey, I want you guys to know Kevin is just one of us. Right? Yeah. Kevin doesn't come from an accounting background.
Yeah, I'm just one of the gang. I'm one of the gang. Yeah.
But just give a little bit of a history of your real estate investing career and kind of where you're at now and what you're doing.
Sure. So when I got out of the W-4 realm, my wife and I were realtors. That was the first company that we started. So you start a company and it's like, wow, I need to keep books. I mean, I understood that from the beginning. I'm kind of numbers oriented. We got to keep books. So I've got to learn how to keep books. For a realtor, that's pretty easy. Okay. I mean, that's not brain surgery there. So I learned how to use QuickBooks. I had some accounting in high school, and in college, okay, but nothing, I'd forgotten most of what I did by the time this happened. So I learned it, and then we moved from being realtors to starting to flip properties, starting to hold some rental properties, Airbnbs down the road, some different things. So I learned how to do that. So about 3 or 4 years ago, people started coming to me and saying, "You do bookkeeping, right?" "Yeah." "Well, I need some help with that." Okay. Then the church needed a treasurer, so I'm the church treasurer. So then our subdivision needed someone on the board to keep the books. So I did that for my 3-year stint until I had to jump off. It's not like politics where you get in office and you get to stay forever. Sure. 3 years you're off, and so I did my little stint there. And I'm like, well, wait a second, I like doing this. I love doing it. Love helping people do it, to understand it. So why not start a business? So I did.
So as you're going through that, you actually went through perfectly what kind of like the differences between the types of books that people need to have. So if you're a realtor, for instance, it's a very simple bookkeeping.
Sure.
It's literally revenue in, expenses out. The way I talk about it for my finance teams and my CFO and the different companies that we have, I look at like that company. It's just a piece of paper. That's right. All it is. It's just a piece of paper.
That's right.
Now, then you started making it a little bit more complex, right? So then you brought in the flipping business was second, right? So so now the flipping business is a little bit more complex. It's not just not just a P&L. There's a little bit more that is involved.
It's two-dimensional.
Right. So now it's two-dimensional.
Right.
Maybe 3 if you count private lenders, because you have money coming in, you've got money coming out, you got somebody else's money that you're having to be in charge of. And so it kind of becomes like maybe 2 or 3-sided. You could say you have a balance sheet, you've got lenders' money coming in. You've also got you still have your P&L, right? But you also have COGS that you really have to pay attention to, because COGS will eat you up just as much as expenses will when it comes to flipping. Now, when you start getting even more complex, now you're owning rental properties. So rental properties can be almost like a cube. I mean, there's many, many different facets and things, because now when you're owning rental properties, you really do want to know like how much equity you're building. You really want to know, you want to know your balance, you want to know your P&L. But the problem that I see from a lot of turnkey buyers, a lot of people that own rental properties, they only look at that one thing because their accountant doesn't really know everything. Their bookkeeper doesn't really know all those little facets. And they only look at the P&L, and it's like if you only look at the P&L, like you would never want to own rental properties.
No.
Because where the numbers really matter in rentals is not on the P&L. Now I'll tell you. Right. Now I'll tell you, if you own a brokerage, all the numbers are on the P&L. Like you could tell how good a brokerage is by just looking at the P&L. But by looking at your rental portfolio, you got to see the whole picture when it comes to that. So maybe just give a little bit more. I try to give a little bit of explanation there, but just maybe like what numbers should people be paying attention to if they're just a simple business, buy and sell business, if they are, a flipping business, or whether maybe they're owning rentals.
Well, you covered a lot of it. So being a realtor is simple. You have income and you have expenses. Okay, your profit and loss is your main piece of paper. There's not a lot to see on the balance sheet. You're gonna, if you have loans, they're on there. Your assets are generally your money. That's it. That's all there is. When you get into flips, now you don't have a business. Every house that you're dealing with is a separate business. So you need to have multi-dimensional reports so that you can easily print off how the company's doing, and then other reports to show how each property is doing. Okay? And the balance sheet starts to become important not as much in flipping, but in rentals. But the balance sheet is important in flipping as well, because you're carrying your I guess you would call it. It's the asset starts to grow as you put money into the asset. So all of that stuff is on there, and then you've got cost of goods sold, which is very important. You want to separate that out from your operating expenses for the company so that you can see what your gross profit is on each one of your units. When you get into rentals, it needs to be two-dimensional as well. The balance sheet is very important because, like he said, the rental income is just a piece of it. The profit and loss sheet is your eat money. That's the money you can eat. But the balance sheet grows. That's your appreciation, and that's what's the key in rental property. Plus the tax benefits with the depreciation and so forth. So,
and don't forget how much money that the tenant is paying down your principal. So like,
that's right.
You're growing, like, you're not just growing in one way. You're growing in two ways at the same time, and it's hard to see that on a single sheet of paper.
That's right.
But unless you really kind of understand that, and you need to be diving into that and seeing the full picture before you really like give up on a property.
Right. So to explain a little further what he's saying there. Your property is appreciating, so your balance sheet is getting bigger. That's one side of it. Most people have loans on rental properties. Every month when your rent comes in and you make a payment on that mortgage, your principal gets reduced. Okay, so that increases your balance sheet. So your balance sheet is increasing from both sides. It's very you can't see that very well on a spreadsheet.
Correct, yeah.
In QuickBooks, if you put the numbers in right, you can see that.
Shouldn't a financial advisor understand that?
I've never seen a financial advisor that really completely...
Because I've had dealings with investors who they analyze a deal. There was one particular deal a guy passed on where we were giving away at the sale at the time. We were giving away equity, which was true equity in the property, turnkey. So finished project, and but he was really focused on the cash flow. That was it, and he said he was my advisor saying this or that, and I told him the same thing, like you're missing in this deal, not only the appreciation play that was very and for this particular property was a really good opportunity, but just the equity itself. I'm like, that's not normal where you acquire a property that has instant equity like that. But it wasn't necessarily part of an item they were paying attention to. It was really interesting.
Yeah, it's interesting that financial advisors really don't know a lot about these complex issues.
That's scary.
A lot of them are cookie cutter.
Interesting.
Okay, and a lot of the ones that are cookie cutter in the financial industry, when it comes to stocks and bonds and everything, they're incentivized to give you information about their product. Okay, so they're not looking out for your best interest. They're not a fiduciary for you. A lot of them are not. So you have to be careful with that. You have to have the right people. CPAs, there are a lot of CPAs out there that do not understand real estate, so they can't give you tax advice that's going to help you come out ahead.
So how, and I've heard you talk about this, so our accountant Josh is one that you recommend. You believe he has a really good pulse on real estate. How would an investor be able to identify that? How would they know to ask the right questions, or what's a good way for them to know that? What are some things that, because I hear that.
I mean, to me, I would say, if you're asking me, I'm not sure if you're asking me
both
or
of you, both.
But I would say, like, I want, if you're gonna really be in real estate, you need to have an accountant that's not just understands real estate, but specializes in real estate. There's a big difference there. And honestly, even most accountants are still not going to give you the amount of detail that you really want.
Sure.
Which you really do need a good bookkeeper that understands, this is what I want. We've kind of had to train our own in-house, staff. And I believe Heather does a great job. Heather understands the balance sheet very well. She understands, cost of goods sold. She understands all that stuff very well. And even for us, as you get larger in flipping business, like your properties roll over, right? So, the cost of goods sold becomes a lot more important than if you're just doing like 1 or 2 flips a year. It doesn't really matter that much.
Right.
But if you're doing like 100 a year and you have like 30, 40 properties that roll over every year, it's a whole lot.
Can you explain the rollover to someone?
Well, because when you're rolling over from year to year, you're carrying over. And so your balance sheet doesn't necessarily even give you the full story at times. Because like Kevin said, you're putting more money into that property. So the property, you're adding to the balance sheet, but at the same time, you're not really getting more cash in.
That's right.
So it becomes kind of, and this is where a lot of flippers get in trouble because, they really, they end up running out of cash. It's like any business, really. Like, what's the one reason why businesses go out of business? Because they run out of cash. So if you're not paying attention to it and you don't understand it, and that's why I always say the most important number to me is my cash on hand number. Like I always want to know how much money is mine, how much money is investors that's in all my accounts.
That's right.
Now, if you're a passive investor, which is most of our audience here today on this podcast, you don't need to worry about what I need to worry about as much. So let's really talk about that. So let's talk about what are the things, if you're a passive real estate investor, maybe you own 20 properties, say, maybe they're 20, rental property. Most of them are rental properties. What are the most important, maybe key metrics that you think that they should be taken care of? And maybe like if somebody had 20 properties, for instance, what kind of bookkeeping would you say would be prudent for them to maybe have on their own versus we provide a level of bookkeeping. We have a software called Buildium, and Buildium gives them a level, but it's not a full service. It doesn't really give them what I would think they would want if I were in their shoes, if that makes sense.
Right. Okay. Well, let me see if I can explain what I know about this. You need to be able to print reports on all of your properties where you can easily see how your rent's coming in. Is it coming in on time? Is it coming in at all? Do people miss months? You start right at the top, the income. What's going on there? Then you can take a look over a period of time and see how many vacancies you're getting in these properties. Okay, and you can see what it's costing you to rehab these properties. Okay, which is taken away from your bottom line because you're getting no rent while that's happening. Plus, you're spending money.
No, wait a minute. So you're trying to tell me that every time one of your properties turns over, you have to spend some money?
I have to spend some money, and I'm not
even
getting
you
any
for
money.
your own properties.
Huh?
Even you for your own properties, right?
Sure.
Okay.
Sure.
I just wanted to clarify that.
Sure.
We have a couple.
Yeah.
We have a couple
You get
owners
hit
from
on-
time to time that just they think that they don't ever have to spend any money ever on property. But I just wanted to
Well, you know,
clarify that. Even
yeah.
in your own properties that you manage, you have to
It's-
spend some money. Sometimes you have to repaint a couple things. Maybe sometimes you have to fix up.
Yeah.
Like what the last tenant messed up.
And sometimes it turns into a major rehab.
Sometimes.
Because sometimes somebody will move in and they'll do more damage in 3 months than I can fix in the next 3 months. Okay? So you're getting hit on both sides. You've got to fix it, and you're not getting any income while you're fixing it. Okay? So you want to spot that quickly in your portfolio of properties because maybe this particular property isn't for you. Maybe you're doing the same type of the same type of checking on tenants and everything as you do on your other properties, but this particular property just pulls in something bad.
Is that a thing? Can you say, or is it just a coincidence? Is it just by chance that one particular property may
No, that's
have...
a good question. Because, there's definitely been times where I've owned properties, right? And it's like, the first 2 tenants were just horrible tenants.
Yeah,
And then I had somebody in there that stayed for 10 years and they loved the property and never had a problem.
Right.
And then I've had the flip side where I had somebody
Yeah.
that stayed in the property for 4 or 5 years, and then all of a sudden, like, the next 3 tenants just turned over, every year, and it just really, like, so.
I mean, I've had that. I've had one where two
and a
consecutive
lot-
tenants.
And a lot of it has to do with is it stressing you out?
Oh, one
Because
particular property.
if it's stressing you out, then do something about it.
Gotcha.
And remove that stress so that you can focus on the rest of your business and growing that. Stress has a lot to do with it.
Yeah. that's
Sometimes you don't.
I can
Sometimes you
definitely,
don't
like-
know what's going to happen. Maybe you will get that magic person. Maybe you won't.
Sure.
But it's like, wow, this is driving me crazy. I can't sleep at night.
Yeah.
I don't know what's going to happen. You don't need that. You don't need that. That needs to go away.
So Tom, he very. I don't know if you caught it. He was really vague when he said, "You mean you have to pay turnovers?" Well, just throwing it out there. One thing that every investor, especially the newer investors, they have on their performance, they run numbers and they run their vacancy and maintenance right at the very beginning, and they account for it on their performas and what have you. But I do often. One thing we've caught recently, and I talked to even Cheryl, our property manager, is, if an investor has not done any repairs all year long on a property, and then it comes turnover time, and he's got, let's say, $2,000 of repairs or whatever turnover costs. If he hasn't taken from that maintenance cost, it's actually most of that money that he's using for that turnover is actually already accounted for.
It's already accounted for, right?
So if we're talking about knowing your numbers, that is one thing you should not forget. Now, if you've had a bunch of repairs all year long, and then that's a different conversation. But in most cases, I don't think we see a lot of that in our properties. So
well, and even sometimes some people live in, you get your first tenant and they'll stay for 3 years, right? You won't do anything for 3 years,
Yeah.
and then all of a sudden you got to pay $3 or $4 grand, and it's like, hey, the longer that person's in there, you have to think like the bigger of that turnover is going to be.
Yeah.
It's not just that the person wasn't clean.
Sure.
You have to think of I think what we forget sometimes
Things wear out.
is our own properties, right?
Yeah.
Like how much money do we actually spend on our own?
Yeah.
I just spent $900 this week on something on my own property. Would you think I wanted to spend that
you
money?
mean you have
No, I didn't want to spend that money.
At your own
No,
house.
seriously, on my own house. We forgot. So, like, we live up here in the north, and up in the north, we have this thing in winter called cold.
Yeah.
Oh wow!
Right,
Yeah, it's
and
true.
you have silcocks. If you guys understand what that is, it's an outside spigot, and if you don't turn your outside spigots off from the inside, they will freeze. Most
They
people
even do that where I live.
90% of people forget to turn those off, and
might
I
be
was
higher.
one of them
It
last
might
year.
be higher than that,
I will
yeah.
tell you that. So last year, so this week, Monday morning, my wife's like, I would need to clean off my front porch. So we went out to the back
springtime.
and
Yeah.
we turned on the hose, right? And we're out there trying to water the front porch. And then we get notified that there's water in our basement. There's like a half an inch of water in our basement. I'm like, what in the world? So apparently that's what ended up happening. So I had to have a bunch of stuff done. And I figured while I was having the plumber do that, then he probably should fix the other silcock that went last year that I didn't even fix last year. And then a couple other things.
This is
as
a
well.
personal story
But hey,
from Tom
hey,
Olson.
This is a
Right.
personal.
This is real.
This is even my
guys.
own
It
property.
It happened.
And what just drives me crazy at times is that people think that they're never going to have to. They're
Right.
going to own an asset,
Right.
and they're
That
never going to
appreciates.
have to do anything to it.
Sure.
Even though we tell them they're going to have to. But even the accountant, even not the accountant, but the bookkeeper here is telling you you're going to have to do some things.
That's right. And depending on how some businesses have better cash flow than others.
Sure.
If you're good, you're good. But if you're just learning, sometimes your cash flow isn't that great. But doesn't it make sense? You're looking at a certain percentage of money that you're factoring in for repairs. If it doesn't happen that year, why not just have another checking account or another place to put it that bears a little interest and roll it over there? Mm-hmm. Just roll it over there, and then when it comes time to fix it, there's your money. Mm-hmm. There's just easy ways to take care of these things.
That's good.
Because it's going to happen. You're going to repair the house if you own it long enough, and you're going to do more repairs probably for somebody that has been there for 5-10 years than you are for somebody that rents it and takes care of it and they move out in 1 year. So
That's good.
move some money to another account.
So
Make
that's
it easy.
That's a
Yeah.
really good idea, a good tip for people out there that own rental properties.
It works for a lot of things. It works for tax. You know how much, you can figure out how much tax you're going to have to pay every year based on what you paid in the past. Why not have a separate account and just move some money over there so at the end of the year you don't have the stress. It's there.
Yeah.
Or pay it in quarterly, or whatever you have to do, and it's done. Just simple
relieve
things.
that stress a little bit. You were
Yeah,
talking
absolutely.
Stress. There's three ways the mind can be in. It can be in a good frame of mind because things are going well. That's great.
Sure.
Okay.
It's dreams.
There's
Yes.
another side where things are going bad. That's the middle scenario to me, because if you know what's wrong,
Sure.
it's an opportunity and you can fix it. Okay. The third one is the one that keeps you up at night. It's the I don't know.
Yeah.
You don't want that. I don't sleep well when I don't know. I have to know, good or bad. I need to know.
Well, and honestly, that segues right into why you need to know what your numbers are, why
That's
you
right.
need to have good books. Because if you don't have good books, if you don't really know, then you don't know. I mean, if you don't really have numbers in front of you, because numbers don't lie. Numbers pretty much tell
Your checking account
the
doesn't
pure story.
necessarily tell you how well you're doing, because you've got some money in the check. You've got a bunch of money in the checking account. I'm starting a new flip. Hey, I'm doing great. I got $50,000 in there. Oh, wait a minute. That $50,000 is money I borrowed for the flip. It's not my money. Okay, so you need your balance sheet and your profit and loss to see where you are. Then you can sleep well at night. Or you can sleep maybe not so well, but at least you know what the problem is, so you can tweak it. So tomorrow night you can sleep better.
Okay.
Exactly.
So you said you're a numbers guy. You love it. This is
Sure.
kind of turned into your thing. I'm not a numbers guy. Okay. What should I do in that situation? Where should I turn? Where should I start?
Well, most real estate investors are not wired to enjoy coming home after a day's work and firing up QuickBooks.
That's
Okay,
accurate.
and matching the bank accounts and the credit card. They're just not. I am wired that way. My wife, she handles our real estate things right now. We do a lot of flips. It's what she likes to do. She really, we could. I'm sure we could make a lot more money with a ton of rental properties, but that's not her bag. She's going to be stressed out with that because she doesn't like that game. She just doesn't like it at all. Airbnb, she likes that a little bit, but we don't have that many. But I am wired for doing bookkeeping. I like it. So if you're in your situation where you don't like to do it, okay, and maybe you're not good at it, those are the things that you find somebody else to do those that are good at it and they like it. And then you can take your time and your stress with doing that, and you can do maybe one of two things with it. You can work more doing the things in the business you do like, okay, which is going to make you far more money than the time you spend on a bookkeeper, because you can make more money doing that than you're going to pay a bookkeeper. And the other thing is, maybe you don't want to do that. Maybe you do your bookkeeping on weekends and when you come home at night. Maybe it'd be nice to have that time to spend with your family.
Sure.
So what's the price on that? It's priceless, right?
Or it's either that, or it just doesn't get done.
Right.
Right. Or you end up coming to the accountant with a box full of receipts.
Right.
And then you're in that don't know scenario the whole year. Okay,
Then
so
you're in
you're
panic
stressed
mode.
out the whole year, and then panic mode starts to set in right around the holidays, or maybe a little bit after. It's
Sure.
like, oh, it's CPA time
March
again.
14th.
Right. Some people wait until then before they stress out. Some people can handle it better. But when you take that to your CPA, CPAs generally charge more money than bookkeepers do. So now he's got to figure it out. Mm-hmm. So how much is he going to charge you?
And like you said, he's not going to catch everything your
no, he's not going to catch everything. He's going to put it. He's going to put everything in the right category. Mm-hmm. Okay, and so he can do your taxes. Mm-hmm. That doesn't help you at all in running your business at all. That's interesting. The year's gone. It's over. Mm-hmm. So
and most of us would assume that my accountant's doing that for me.
Absolutely not.
That's a really good take.
No, I mean, really, like, in my opinion, I think for bookkeeping, you really need two parts of bookkeeping. You need, actually probably three, but the main two parts are, like, making sure that you're actually having books, like you actually can see your P&L and see that. And then the other thing is always trying to figure out what are numbers that are important to you.
Right.
And every person's going to be a little bit different. So I can't sit here and say, hey, what's going to be most important to you is going to be the same thing that's most important to me. So like working with a bookkeeper, working with, even maybe somebody like Kevin that says, hey, like, what are your most important numbers? Maybe I can give you a monthly dashboard that you can kind of say, hey, this is where you're at on these types of things.
Right.
While we got you here, I know that you have a business, and I know that you're not on this podcast just to promote the business, but we'd definitely like to hear a little bit about what you can do and what you do for people, and then how somebody might be able to get a hold of you if they're looking to maybe have somebody that has a little bit of extra help in their bookkeeping.
Sure. So our goal is to help you stay working on your business and not in your business, so that you have the reports you need to figure out how to run your business in a good way, okay? But you don't have the stress of doing the bookkeeping part of it. And Tom is right. Bookkeeping is not the same for every client. No two companies, I don't think, out there have the same exact chart of accounts, because things are more meaningful to some people than they are to others. So it can be tailored to what you need. Okay, so I can give some advice on what you might need, and you can and my client can tell me what they need. Okay, and we can have like a dashboard for that. We can split expenses up in a certain way so that it's meaningful to somebody, where another person goes, nah, I don't need that split up. I just need one line. That's all I need. Okay, so we cater it to what people need. And
built to suit.
There you go. I learned bookkeeping from a real estate standpoint, so I do know real estate very well. However, I do bookkeeping. I have clients nationwide. I do bookkeeping for many types of businesses. Bookkeeping is bookkeeping for the most part, until you get into the complex stuff like real estate. So the other stuff to me is pretty easy. I have lawyers, I have interior designers, I have a pet walking company that I do out in California. That's a thing out there. Pet grooming, pet walking, that type of thing. People with financial companies. I think I mentioned lawyers. I have a ranch in Texas that I do bookkeeping for. It's a lot of different types of businesses. So they all need different things. Their chart of accounts look totally different, so we match it up with what they need, and we take care of their accounts on a weekly basis. The busier books, we're in them every day. The ones that aren't quite as busy, we're in it every 2 or 3 days. At the end of the month, we reconcile all the accounts to make sure that they match. QuickBooks matches your bank statement, so that all of that's done. We find out anything that we're not sure of from the client as far as uncategorized things. What was this? This is new. I haven't seen this before. We get that information back, and we provide a statement of cash flow, a balance sheet, and a profit and loss every month. If you have questions on it, you call us. We'll go over it with you. So that's our service.
So somebody wanted to get a hold of you. What's the process for that? What's the process of getting onboarded with you?
Okay, my phone number is 804-307-8227. That's 307-8227. Email is kevin.coastalbookkeeping@gmail.com. You can get in touch with me at either one of those, and I'll set up a Zoom call with you. We'll talk about your scenario, what you're looking for. I get some information from you. I can write up a proposal for you on what we would, how that would work for you. If you're agreeable to that, we send out an engagement letter for signature. I give you a list of the things we need to get started, and we go.
Awesome.
That's
Well,
good.
cool. The only other thing, I guess there's two other things that my team does for me, and that is like my team also goes through all of our credit cards and make sure that they reconcile all the credred cards. So it's, again,
I think we do reconcile all credit cards.
And
Absolutely.
maybe for turnkey investors, you may not need that because there's not a whole lot of credit card.
Unless you're doing it yourself.
There's a lot of
but
credit
for businesses
cards.
there are.
For businesses there are, and there's another thing that, and if you're listening to this, there's a good likelihood that you might be this person, and it is what it is. I see it every day from just about everybody that I do work for. They do tend to charge personal things on their business credit cards, and vice versa. Credit cards and checking account. They use the wrong checking account. They use whichever checking account they happen to have with them at that time,
or
the one that has money in it. We run into this a lot. Hey, you're tight on money. I've got this credit card over here for this company, and it's maxed out. I got the one over here that's got some stuff on it. I need something for this business. I put it on this credit card because that's where the money is. Okay, makes it hard.
Sure.
It is. It's not the right thing to do from a financial standpoint. The IRS is not going to like that. We can make it work in bookkeeping. We know how to move it around. It does take more time, and it's costly. It's costly. Right. It's more transaction work for us. It costs more, so it's something we see all the time, and it's one of my picky things. We can control that, and I know why a lot of people do it. They're not paying attention, number one, or number two, they've got that card that gives you 5% back on everything, and they've only got one of those cards. So they use it for everything. They want that 5%, that Amazon money.
Yeah.
They buy Amazon for their house, and they buy Amazon for their company, and when it shows up on the credit card, what does it say? It says Amazon, and it doesn't say anything about what it's for. Okay?
Sure.
Is it personal or is it business? Oh, it's business. Well, tell me what it is. Okay? Happens all the time.
No, it's a really good point that he brought up there. And, even internally in our processes for our own personal companies, or all of our companies here, like we require every single charge for the person who made that charge to immediately take that receipt, email it to our finance team, tell them what property it's for, what company it's for. And I'm probably the one that's the most guilty of probably using a different credit card. And not because there's not enough money in it, not because of any of that, but just because sometimes I literally don't have that credit card with me, and I have 9 companies, so I'd have to carry like 40 credit cards with me.
Today's only got 20. Today's only got 20.
Occasionally, I have this huge stack in my pocket. I tell you, I'm still missing half of my cards here.
I have a
But
lot
but I'll tell you, most of the people, like Jared, probably rarely ever has to do this, or where a personal, where he personally has to get reimbursed for an item, or maybe one company has to get reimbursed, and it's not an illegal thing. You can do that, but you need to be keeping proper, records of it. And for me, like I'm so, I don't want to sleep at night. Like I don't want to be that guy that doesn't know. So I'm so much like that I want my girls to like be reconciling weekly. Like I'm not even okay with monthly. Like I want weekly reconciliation of every single one of our companies.
And if your companies are big enough, you need to reconcile weekly, because at the end of the month, it's almost like you're behind.
Sure. Oh right, exactly, 100%. I agree.
Yeah, but always reconcile monthly. When you get that statement, it needs to be reconciled. You need to find that problem.
But I think that's a good tip for somebody. Like you need to have a system or a process to process every charge. So whether that's being sent an email to a bookkeeper, and if it could be somebody like Kevin, maybe you have somebody in your office, maybe it's a VA that kind of helps you with some of this stuff. Actually, we hired a VA for the first time forever in helping us with bookkeeping. That's actually one of her main jobs, is to reconcile everything. It's funny to me because she'll send every person in the company an email Not everybody for each transaction, but if she saw that's your card, that you charge something and she doesn't have the receipt, like I'm telling you, within a couple days, you're getting an email saying, "Hey, where's this receipt at? You know, I saw this charge 3 days ago."
That's right.
And you really do need somebody like that in your business that's going to kind of be that taskmaster that says, "Hey, like make sure," because that's a weakness of most entrepreneurs is to keeping track of all these receipts. Just because you have it on a credit card statement, I'll tell you, most of my accountants I've ever talked to will tell you that's not good enough. A credit card statement's not good enough. You need the actual receipt to go with that credit card statement as well. So,
and it is very true in everything I see with my clients that the office people are on it. Okay, but the bosses, the entrepreneurs, not so much.
Sure,
because
they're not
they're not wired that way. They're going for it. They're out there doing the big job.
Sure.
And
so that's why, in my opinion, like if you're at Home Depot, like if you're at the gas station, wherever you're at, like my process is before I leave, I'm taking a picture, I'm emailing it to them.
We have the technology now.
If you create
it's easy.
a super easy process like that, you'll be number one. You'll be happy that you did because somebody else is getting the information. Number two, let's just say that email didn't happen, or maybe it didn't get sent, or who knows, whatever. You'll have a picture of it on your phone.
Right.
Sure.
So now you've got a digital copy of it.
That's right.
So anyways, I think that...
And you can also have your QuickBooks account on your phone, and you can take pictures, and they'll go right into QuickBooks.
Oh, that's nice.
I'm not going to go that far, guys. So now he's crossed the line.
Yeah, right.
Kevin has crossed the line.
That's it.
We could tell our
He's
ladies
getting
about
way
that time.
crazy. Don't tell our finance team that because they'll be expecting us to do their finance.
Watch this episode.
I'll keep it a secret
for them.
If they're loyal to this episode, they're not going to.
Well, thanks for being on.
Somehow, I think that little part's going to get cut out.
Actually, Amelia will probably watch us and like blow it up and try to get us in trouble here.
Yeah,
but I appreciate you being on. Thank you for investing in our community. I appreciate you coming all the way out here. I know you have a doctor that's close by that you kind of stop.
It's kind of a home away from home, and I didn't have a doctor's appointment this time, but I'm 1,000 miles from home, and my wife and I come to see a doctor in the next town over, and we have been for quite a few years. So
it's cool.
But glad to come up and looking forward to speaking tonight and meeting your people in your RIA group.
Well,
it's going to be great.
Like I said, thanks for coming out.
My first time at your office.
Appreciate you coming out. If you guys have enjoyed this podcast, I want you guys to go out and give us a 5-star review. Tell your friends about us. And let us know maybe there's something else that you've been thinking about that we haven't been covering in I think we got about 100 episodes now in this podcast. If there's something we can do to help you guys, let us know. We do build rental portfolios for investors. So if you guys are interested in that, you guys can go to the onegroupnetwork.com. There will be a pop-up that kind of pops up right there on the website, and that'll get you on our buyers list. So I think we are giving away. Are we still giving away something on that?
Well, if you join our buyers list, you do get you get the buyer's guide.
Okay. The buyer's guide really gives you a lot of information about our company. It gives you about the finishes that we typically use in our turnkey rental properties. It gives you a lot about our philosophy, about what we believe. Also, the fact that we're trying to flip Gary, Indiana, and help it become a place that people move to instead of away from. But you can also get on a quick call with Jared, and Jared would love to go over your goals with you and see what you guys are looking to do and try to make sure that we're a good fit. Because the last thing we want to do is take investors that aren't really looking for the same thing, things that we're working for or that we're looking for as well. So thank you guys for listening. Jared?
Well, that's it.
Yeah, that's it. That's for today's.
You nailed it, Tom.
I think so.
Excellent. Well done. Thanks for joining us, everybody.
Active Turnkey.
The best way to buy rentals.
Have a good day.
One Group Network makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information, opinions, and recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional advice. Unless specifically stated otherwise, One Group Network does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. Any third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policy of One Group Network. One Group Network assumes no responsibility or liability for the accuracy or completeness of the content contained in the third-party materials or on third-party sites referenced in this podcast or the compliance with applicable laws of such materials and or links referenced herein.